I don't think a lot of people actually realize how much organized crime or AML, anti-money laundering, actually affects them, like it does now. For instance, that Gucci bag that you would buy from Marabastad, right? That is actually not of great quality, but at the same time, it's illicit. We don't realize what it actually means when we buy it, and what that means to the tax regime, and what that it ultimately means to the organized crime or economic crime schemes.
Lebogang Thobakgale, having you here is absolutely amazing. We look forward to the conversation that we're going to be having with you today. And I know for a fact you probably didn't wake up and decide to spend your career chasing money launderers. There's usually a moment that makes it real for you. Yeah. Working inside the world of AML and compliance, specifically at KPMG, was there a specific case, a number, a transaction pattern that stopped you cold and made you think whether, existing AML frameworks were actually enough?
Thank you. Thank you so much for having me. You are certainly right. I did not wake up one day and go, I'd like to do this. I'd like to be an Mkwanazi. But to be honest, I feel like AML really found me. The passion around it really found me. So I actually am an internal auditor by profession. So I started an internal audit.
Right.
And I started my career at KPMG, then I boomeranged out and in back. But in those years where I was away from KPMG, I actually earned a lot of accolades in what I did in the financial crime space. And that really assisted through working with the Financial Sector Conduct Authority,
right,
which was at that time the FSB, Financial Services Board. And I think that's where really the passion for anti-money laundering and compliance really came into being. So definitely not one thing that I woke up and thought I should be doing. But just to answer you directly on the AML frameworks, I certainly, there's a lot of things that you look at and you go, I don't think they're working, right? I don't, and usually when you see things not working, ideally you should look at them and go, who needs to be sorting them out, if not you, if you don't want to be part of the solution, really. But when I realized with my career that this, this is a space that really needs a lot of professionals, that needs to be honing on it, is when I started seeing how organized crime is exactly that, very organized. Criminals work in the most sophisticated manner. And I realized how regulators, authorities were not there yet at the time when I was still at the FSCA. If we were to look at the SIU, the Special Investigation Unit, the Financial Intelligence Center, the SARB, and the likes, the NPA even, how they work towards organized crime. However, there's still some isolated, incidences where they need to coordinate on that, right? So I did think about that, and I thought, well, from a banking or investment professionals, because that's where I pivoted into after the Financial Sector Conduct Authority, I then realized that we're more or less trying to fight the same thing, but again, it's still not organized or coordinated. Similarly, when you look at the men in the street, for instance, I don't think a lot of people actually realize how much organized crime or AML, anti-money laundering, actually affects them, like it does now. For instance, that Gucci bag that you would buy from Marabastad, right? That is actually not of great quality, but at the same time, it's illicit. We don't realize what it actually means when we buy it, and what that means to the tax regime, and what that it ultimately means to the organized crime or economic crime schemes. So that's really what prompted me to get into this space. But there's a lot of underlying work that went into it. Yeah.
You've touched on a lot of good points that I actually want us to dive deep into as we go into this conversation. But is there a version of you earlier in your career that would be surprised by how financial crime is actually currently operating and the institution that it is today?
Certainly. I mean, back then, and I'm not giving away my age at all, but back then we used to call it white collar crime, right? It's still the same term now.
Right.
Essentially, it means, well, it's crime, but not perpetrated by people on the street, so to say, right? It's corporate crime. And at that time, as an auditor or as an accountant, you are able to vouch. You know, what we used to do back then, you vouch against invoice A and a copy A. And it used to be seemingly a bit easy to see that this is fraudulent or this is not.
Easy to detect with the eye.
Exactly. And then that obviously evolved academically to an economic crime scheme, or what we term now financial crime, where you start realizing that anti-money laundering on its own, or money laundering on its own, will not happen in isolation.
Right.
There's predicate offenses such as your fraud, your corruption, your cybercrime that happens that actually aid into that. So throughout my career, I've actually seen that transition from just the normal white collar crime, but to economic crime schemes where we're actually able to see to what extent does this have to the economy at large, which is something I never really saw. You know, it was just compliance, let's comply, but I never really saw the bigger picture of where this ultimately lies from a national point of view.
Absolutely. And I mean, right now we have institutions like fraud as a service that exist.
Oh, my goodness.
I mean, that's not something that existed before, but it does. But that's how sophisticated the industry has become.
Yes.
And what case, trend, or pattern that fundamentally changed how you think about financial crimes in South Africa?
Yeah, I mean, it's not, obviously I can't divulge too much about clients and what I've seen throughout my career, and it goes beyond the current role that I serve now at KPMG. But what I've seen throughout my career has been things that are quite alarming, honestly. And like I said, moving from actually inspecting your banks and your financial service providers when I was still at the regulator, to at the bank, when you're seeing what you're seeing, to investment companies and the likes. But I think you touched on one of them now, being on fraud as a service, the evolution of it as well. That is quite alarming. And just for the viewers out there, really, that speaks to having to buy a toolkit of fraud from a black market.
Right.
So in essence, that means that one does not need to have any particular skill or expertise to actually conduct any fraud. So such cases for me were things that were quite alarming in my career. Right. But if you were to look at how currently, as South Africa, given that we are off the grey list and we will be mutually evaluated mid-October going into next year as well, the concept of ultimate beneficial ownership and trying to decipher who ultimately influences the business from a complex structure is something that's very important that we need to unpack. And we've seen quite some bad actors in the industry as well in that regard. But it's quite interesting. It does become a bit scary at times, especially when you see how organized and sophisticated this does become as well. Yeah.
I want to touch back on something that you just mentioned, the grey listing. I loved how you were able to break down, fraud as a service. Can you just break down in simple form from a compliance perspective, what does that even mean for us when it comes to grey listing?
And I like that you asked that question, because if you look at it, we are so much involved than we actually think. So if we look back to when we were actually grey listed, the Financial Action Task Force, which is a body that, if you were to look at it in this manner, it's a surveillance that looks at various countries that are members of the FATF, that's Financial Action Task Force. They essentially check whether our regime or compliance regime on anti-money laundering or counter-terrorist financing are as fit as we want them to be. So they assess that through what we call mutual evaluation. This, the one way that got us grey listed actually happened in 2022, if I'm not mistaken, and we've eventually got grey listed in 2023, if I'm not mistaken. It sounds like a long time ago. But what they assess there, amongst others, is whether our regulators are able not only to be to enforce laws,
Right.
but are they able to actually show the accountable institutions or the businesses that are registered with the FIC that compliance should actually be followed? But more important than that, we get assessed at a national level. From a national perspective, what the FATF looks at is whether we are compliant completely, right?
Right.
So when I say people are, we all have impact on the grey listing than we think.
Yes.
I mentioned earlier your illicit goods.
Yes.
I mentioned as well the what we call the wildlife trading, that also includes some of the financial crimes that the regulator, or rather the FATF, looks at.
Right.
We look at the likes of KYC, which is very
Yes.
close to what you guys are doing.
Absolutely.
How we are conducting Know Your Customers ultimately feeds back into how we are viewed as a country. So now what the regulator, or rather what the FATF will come back and do, is to assess, well, you are off the grey list, which is good. Now it means investments can come in. There is quite some confidence in us as a country. You would have seen from an economic point of view that the S&P grading went up because we got off the grey list. You would have seen we were removed off some of the high risk. So that's good news for South Africa. But what it means now with the mutual evaluation is that they now need to test whether we are sustainable. So you'll probably see the regulators showing more of their teeth as well to show that there is actually fines, and if you don't comply, we will actually fine you. But from a collective economic point of view, it affects us from attracting investments and ultimately our growth, economic growth, as it were. Yeah.
Sure.
Yeah.
And I think even on that, when we look at the online cybercrime that's taking place and the increase in the influx that's taking place, some would even say there's a war on cybercrime that's also taking place. Would that also have an impact with our grey listing?
No, absolutely.
Yeah.
Absolutely. So it looks at various aspects, right?
Right.
But if I were to be technical, the FATF recommendations, which is what essentially we should be following,
Right.
looks at two different facets, right? One is on the technical compliance. How compliant are we? And you'll see when the FATF actually does that, it'll look at you're compliant, largely compliant, or partially compliant, right? We need to be there. And
Right.
we're doing quite great from an AML perspective currently now, given that we are off the grey list.
Yes.
Technical compliance, right? And so if you look at, and to your viewers as well, if you go to Know Your Country portal,
Yes.
or rather website, and check where we are from an AML perspective for South Africa, you'll see that we are now medium risk rated.
Sure.
That essentially means that we moved from high risk to low risk. Now, let's move to the other aspect of immediate outcomes, which is what the FATF also assesses. There it assesses the efficiency of compliance. So how efficient are we? And you'll see when they do come through and they tick us whether we are efficient or not, it will be based on any deficiencies that don't align with those immediate outcomes. In those immediate outcomes, some of the things that we need to be looking at are the technology regimes as well, different financial crimes and cybercrime
Yes.
as well being there. So it does not work in isolation at all. Yeah.
I think that's a perfect time for us to jump into the fact that KPMG advises institutions that were supposed to be, or that are supposed to be the last in line of defense against financial crime. But at some point in your career, you must have looked at the framework everyone in the room was defending and thought, this is just not going to hold. What did you see that others perhaps didn't, or maybe didn't catch yet? And how do you have that conversation with a client who just doesn't want to hear it?
Yes, sure. That's a brilliant question, and I'm not just going to align it to obviously what it is that I'm doing from a client perspective now. But if you actually look at compliance as a service, there's a lot of alignment to costs. So direct correlation. So once you talk compliance, everyone says it will be costly. It will be costly. So that's something that comes out of most client conversations or board conversations as well. Right. But what I've seen that really people are not focusing too much on is why is there too much cost to your understanding? Why do you think that compliance denotes cost as opposed to value? And those are some of the things that you see. This is not going to fly because you think a person go, well, too much resources there, cut here. And most of the time it all boils down to the compliance function because, like I said, it's synonymous to cost or high cost as opposed to value. So what I've seen in my career is that people actually don't understand their business activities as they should. The regulator has actually given us leeway, and perhaps we will unpack it along the way on how the regulation has actually changed from a rules-based to a risk-based approach. With the risk-based approach, what the regulator is actually saying to us is that we're giving you principles. These are the principles. Go and apply them the way you need to or you see fit, but don't deviate from the principles. What that essentially says is I'm telling executives and boards, go and do a business risk assessment that is aligned with your activities. If you're going to take templates that are, over the counter and want to fit it into the capabilities of what you're doing, that's where you'll see cost connotated to compliance. Because all you want, they said I must get a compliance officer done. They said I must get this done. But if you don't
treating it like a checklist.
Exactly. So if you don't have the core understanding of your business, you won't be able to do what we call a business risk assessment. So that's what I've seen quite a lot in my career, where there isn't a tangible business risk assessment that should be talking to what risks are you trying to curb, what controls are you going to put in place, and how are you then going to apply the act there. But cost or compliance as a cost has always been a pain point, and I think it's always conversations that we should be shifting into, but what value are they bringing? And have we actually assessed where exactly they need to be fitting in?
Institutions will tell you their AML controls are tightening. Regulators will say frameworks are improving. But there's often a gap between what's believed to be working and what's actually happening in practice. From where you sit, where does that gap actually show itself clearly today?
Sure. You know what? In both the regulator and the compliance defense, they're both right. So there is some tightening. Yes, there is some tightening of some controls. There is some regulation. Maybe let me start with the regulators. We've got the best regulations in South Africa. They're best. And that's because we apply best practice. You would have noted that before the FSB, then came an FSCA. There was a whole change from rules-based to risk-based. And that's what we call the Twin Peaks now, right? So having said that, during that, and I remember at the time I was still at KPMG, and we were very instrumental in helping them actually make the change from FSB to FSCA. So I remember very well that the notion there was to focus primarily on regulations that are fit for purpose, that are fit for best practice, and that are still very much a risk-based approach. So you'll see that we, from a regulation point of view, we do actually adapt some regulations from the UK, and that's why I'm making specific reference to Twin Peaks, because I do know the FCA from the UK is something that we adapted as well internally. So certainly there is great regulations, great guidance that we're getting from the regulator as well. So they're not wrong when they're saying the regulatory framework is fine there.
Yes.
AML, there is, or compliance as a whole, there is quite a lot of shift. We're enhancing ourselves. I mean, if I look at my competency from where I was as an internal auditor, monitoring becoming my forte, to moving to compliance, and now deep diving into financial crime, there is quite a lot of competencies that we're building. And we're not just building it sitting behind the laptop. It's really about gaining best practice, making sure that we are part of the, the global coalition to fight financial crime, various platforms as well. So compliance officers are really tightening as much as they can. And regulation, they use it as they should. The problem is in the coordination or lack thereof. Right? So the regulator is still much seen from an industry perspective as one that uses an approach, a stick approach, right? comply or else. And we've seen that. We've seen quite a lot of alarming fines, honestly. It is quite shocking. You wouldn't even want to talk about it. Yes, it is to indicate how important the regulation is, but at the same time, it does cause a little bit of some scare to the institutions that should be forthcoming. So I think that's one approach from a regulation point of view. And as such, the authority would be deemed as though, you will comply whether you like it or not. And that's the industry view, by the way. From an AML perspective or compliance perspective, you find that there is a lot to actually show. The suspicious transactions that you need to be submitting. You need to be open to tell the regulator even upfront if there was something that was coming. But I don't see that coming now. I still see that's the regulator. This is what we're doing. We're scared of them, But I do see a change. I think we've got a couple of platforms that are trying to bring together the public and private sector partnership, the likes of your SAMLIT, it's South African Anti-Money Laundering Task Force, a SAMLIC as well from an Eastern Southern Africa perspective. The Global Coalition to Fight Financial Crime is trying to bring that together as well. So it's in just the lack of coordination, and I think it's just stems from authority and who's regulated. But I do think that will change along the way. And just to add, the Minister of Finance in his budget speech recently spoke about the inter-agency coordination and exactly to curb that or close that gap that we're seeing now. But in that, I think the call is to really just also include the private sector in there, so that you don't just have authorities speaking on their own. You've got the banking sector, the investment sector, and other professionals that are accountable institutions that actually know what they're talking about from a business activity perspective. So let's come together. That's the only thing that's missing.
I want to go beyond the headlines now. Just from your perspective, how serious is financial crime?
Sure. Straight to the point. If we were to look at the global view, for instance, so financial crimes actually aid about 2 to 5% of the global GDP.
Sure.
In simple terms, that actually means that you've got illicit funds that go in and out of the economy that are illicit. Exactly that. And that actually adds to the collective view of global GDP. 2 to 5% is a lot. And I always say that perpetrators don't have their own economy. So it's an economy for illicit funds. No. They get back and integrated back into the same economy. So that alone should show how dire that is. The NASDAQ, and NASDAQ is obviously an institution that assists with financial intelligence as well. So there's a report that they published that of that 2 to 5% of the GDP, 3.1 trillion of that are illicit flows.
Sure.
3.1 trillion. And remember, as we were unpacking financial crimes, there's various types of financial crimes. Your corruption, your wildlife, your slavery, or what we call human trafficking and the likes. Bring it back and you wash it back into the economy. 3.1 trillion. That's a lot. So if you were to ask me how important it is, I'd say it's dire. It's something that we should be looking at at a national level, and the National Treasury, along with other authorities, are definitely looking at it. And that's why you see such stringent controls around the regulation and the likes. But again, maybe to provide some nuggets just to show exactly how stringent this is. We just came from the WEF, the World Economic Forum, right?
Yes.
If you look at the report itself, it does show, because it provides some ranking as to how dire or what risks are. And you'll see that compliance or corruption and or financial crime is yet to be ranked high for the next 2 to 10 years. What that tells you and I is that we will still be talking about this financial crime as a risk in the next 2 to 10 years. What that should be telling us, actually, what we should be asking ourselves is, what is it that you and I are actually doing to aid positively? What is it that we are led about to make sure that we're not adding to the negativity of financial crime. Again, some nuggets. Again, I'm just pushing in some numbers so that you can see how easy this is, right? Or how important this is. If you, again, look at the compliance, the corruption perception index, well, from an economic point of view, when you talk CPI index, it's something different. In my world, CPI means corruption perception index.
Yes.
We are set to be in the median as South Africa.
Sure.
So how we are gauged, I think there are about 180 countries that are gauged in the corruption perception index, just to show how dire the corruption is. Remember, we're talking from a financial crime perspective as it were. So the South Africa is actually in the median, I think 45%. So if we were to gauge, how they gauge us is that if you're in 0%, then you are very corrupt.
Right.
If you are on 100%, then you're very clean. That's how they actually write it, very clean. I'm like, wow, very clean, very corrupt. So we are in the median. It actually shows that, that there is room for improvement. It is quite important. One would like to see themselves very close to the very clean as well. But collectively, if you look at it from an AML index, I spoke about us being medium risk now, to corruption index, it's quite alarming as well. And seeing as well collectively in the globe where we're sitting from a risk perspective. So it is what it is. To answer you directly, it is catastrophic. We just don't see it.
Yeah. And even piggybacking on that, would you say we are getting ahead of financial crime, or are we still largely reacting to it?
Well, I'll speak from a compliance perspective, given that there's standards that we need to be following. I mean, even though there's principles, but there should be some standards, right? So if you're going to tick someone to say that they are good at what they're doing, there should be some level of standards. And our standards are those that are set by the Financial Action Task Force or the FATF recommendations, right? So as you look into that, I do think that, well, maybe just to explain a little bit better, what the FATF does, it sets the recommendations and it cascades to a national level.
Gotcha.
Then you find the National Treasury saying, these are the recommendations. Can we now bring in the new bill now that was out, the general laws or general amendment laws for AML to better curb financial crime? Let's refine our FIC. Then the FSCA will say, well, there's cryptocurrencies that are coming in. Let's look at the Kofi bill. Do you know what I mean? So that all emanates from a global view as it comes to regulation. But now back to FATF. FATF says this and that. The National Treasury then says, let's look into the act. And then the business risk assessments, that's us now, institution. You go and implement this and make sure that you're actually curbing financial crime as you should. So that is reactive, if you think about it.
It is.
Because it's waiting for something to happen until we actually do something.
Yeah.
However, we are actually, and by we, I mean the financial industry. I mean, we were at the Financial Sector Conduct Authority conference just a couple of weeks ago. And therein, they were talking about having a bit more of a proactive approach. I think they call it a national scam center, where the banks will be able to pick up what's happening. Similarly, at the same time, investment companies will pick up, but at the same time, the PA or the Prudential Authority will pick up, the FIC will pick up. That to me is proactive. And we're getting there. So to answer you directly, very much reactive now, very much what is there, what do we need to do? But we're getting there because we are having those conversations as well that are quite feasible at this time.
Yeah. And what do you think executive most often misunderstand about AML compliance?
Sure. Clearly that it is not their job, but that of a compliance officer. I appointed you. You curb the risks. You tell me what the risks are. You fix it.
All right.
And that's just hypothetically speaking, but that's a lot that we encounter even from my previous careers, right?
Yeah.
Forgetting obviously that compliance officers are an extended arm to the regulators. We're assisting here. The regulators are relying on us to provide that intelligence by reporting any suspicion and the likes. And seemingly, the board is now relying on us to embed those capabilities, which is fine. But I do feel that where we're missing from a board perspective is that prudential knowledge of knowing exactly why this compliance officer is doing what they're doing.
And that will...
Yeah, sorry?
That will actually also help alleviate the AML that's actually even taking place within companies. Exactly.
And it will shift the conversations from we'll take the pack as read to let's hear you first. What are your pain points? Where can I help you? Where can I assist you? You know, and that's just from a generic perspective. But once you've got the prudential knowledge, I don't even have to explain to you how important an ultimate beneficial ownership is. You ought to know the complexities of structures, and you ought to know exactly where laundering of money can actually happen in those. I'm now just going to enforce what should be happening. So it's just about the prudential knowledge and nothing more. But I do think, again, the regulator is enforcing that quite a lot. So there's sections in, obviously, the FIC Act ensuring that the board.
Yeah.
So ultimately, one should be putting it as part of their strategic objectives.
Yeah.
So simply put, if it's not part of your strategic objective, then it's not important enough.
Sure.
Yeah.
I think even speaking to that, maybe to understand, can we maybe just walk us through what modern money laundering operations might look like today?
Sure, they vary, hey? I think we spoke right at the beginning about the modern day slavery.
Yeah.
It is quite alarming, actually, where human trafficking has actually evolved. You'll see the likes of people saying they're going to, for example, China to do English teaching and the likes, right?
Yes.
Some are legit.
Yeah.
I mean, honestly, granted, some are very legit. Yeah. But what we're trying to do from an educational point of view is to teach people to be much more alert. You know, if it looks too good to be true, it basically, I mean, it essentially is. You don't have a teaching degree, you don't even have a teaching qualification, yet you are called to go, you know. And what happens, which is very sad, is that those particular people that are now part of the syndicate or called to go and teach English in various countries, they are now recruited to recruit others. So that's what it's quite sad.
And that's how we get into trafficking and
exactly. So that's part of it. One other one that I saw that was quite interesting. We usually look at wildlife, you would know, your rhino horns and the likes. And sometimes people would ask, but Lebo, where does this actually come in? Remember, AML is about tracing where the money comes from. So that's illicit crime, right? It's coming back into the economy and it's washed through various things. They put it in investment, they bank with you, they ask for your tax advice. That's where the element of AML actually comes from. So with wildlife, the FIC actually published a report on this, because with wildlife, usually we're looking at animals, but there is some on succulent plants.
Yeah.
You wouldn't believe it. There are actually some plants that move from South Africa to others. They get those, they get paid for it. Again, that's illicit because that was criminal, and it goes back into the economy. But I think, Dini, you spoke more about fraud as a service,
yes,
which is something I really wanted to touch on, because that's quite alarming.
Yeah,
that is fast moving.
Yeah,
because it's selling cybercrime more than anything else.
Yeah,
it's selling how cybercrime can be done, and I think I had said you don't need to be an expert to actually do that.
Perfectly, in fact, you said you buy the toolkit.
That's exactly. You just buy the toolkit and you do whatever you want. It's as though they ask you, so who do you want to scam? Huh? What do you want? What package do you want? It's as though it's we say it jokingly, but if you think about it, that's something that is the South African Banking Information Center actually provided some insights on that as as a toolkit that's underway. It's already there actually, but it's fast growing.
Yeah.
If we go to the banking sector, for instance, and I'm just talking now because I've mentioned SABRIC, the South African Banking Information Center, they also highlighted, when it comes to scams and fraud, that some of the incidences that are reported to them are based on banking apps. And you're like, well, that's not new. Why is that emergent risks? Like, no, it's emerging risks because the banking app incidents are not emanating from technical glitches.
No.
They're emanating from social engineering.
100%.
Because we want to hear, no, you've got a voucher, click here. There's an app, click here. And then it takes you to your app. You put in your PIN, voila, that's it. So that's quite prominent now. And that has been also reported by SEBRIC.
Yeah.
I think about 65% of their incidents emanate purely from that.
Yeah.
Scary.
Yeah. And
Scary.
consider the fact that one app you definitely use today is your banking app.
Exactly.
So scammers and criminals actually do know this, and they're aware of this, and they know how to go ahead and take advantage of that.
Absolutely.
Speaking of that, what are patterns or tactics that you're seeing more frequently in the South African economy?
I think we've really touched on this, especially from an organized crime perspective. But if I were to hone in on how syndicates actually work,
Yes.
traditionally we would think that it's only the financial services industry that is used as vehicles, or rather that are susceptible to financial crime. But now what we're seeing a very organized syndicate. There's the likes, unfortunately, of your property agents that are involved in there, selling property, getting cash from it, and not being able to register exactly where the cash comes from. If you were to check where this person is getting their money, you don't even know they have an offshore account. That's crazy. We would never have thought that the property industry would be used as vehicles.
Yeah.
Then you've got your NPOs. Who would have thought? It's a non-profit organization. What would you do there? It really makes absolutely no sense. But non-profit organizations are used for purposes of association. Remember, there's a lot of donation that go in. Remember, they need to clean the money, right? They need to get rid of the money as well. And being associated to legitimate companies actually does give them a little bit of some credit. Like I said, they don't have their own economy. They go to the same schools that your kids and I go to. They use the same shopping malls. So NPOs, and this is why you'll see the regulation, especially the General Laws Amendment Bill that has come through now, is focusing on NPOs there. What's the money that's coming in? Where are you getting it from? You know, what's the source of this person? So those are some of the ones that I'm really seeing shifting, especially as it pertains to the fact that traditionally we only look at financial services sector, but now it's more accountants.
Yeah,
very bad. You know, tax practitioners. You go to a tax practitioner and you say, listen, you obviously won't say I want to evade tax. But you say, please advise me, if I were to move from this offshore to another offshore, what would that imply from a tax perspective? And if you look at it, SARS, that's how they actually gain the revenue. You're evading the tax from those illicit funds at the same time. It's really harming the view of the economy and the revenue system as well.
I think we touched a bit on what we're able to detect, but maybe let's move to what is made to be difficult to detect. Have you seen situations where something has really slipped through? That's a big smile of a yes.
It is, and I'm trying to figure out exactly at what point or what angle, right? There's been plenty, and by slip through we mean detection, right?
Yes.
And I think this is directly correlated to how do perpetrators actually maneuver. There's again the FIC's report. You see, this is publicly in available information. The FIC published a recent report on fraud scammers, and you would know this.
Yes.
Remember those ones? Remember those ones that would have a Cyril Ramaphosa, like a deep fake, a proper deep fake. Cyril Ramaphosa selling you a product. You know,
someone falling for it.
Someone falling for it. And Motsepe selling you a product. So that one is one of the scams that the FIC hasn't been slipped through, and that's why I needed to make it clear that by slipped through we actually mean it's detected. And from a monetary point of view, I think collectively when the FIC investigated it, there was a value of about 90 million.
Imagine.
That was actually involved in the proper scam. If you look at it, it's not even there anymore.
Sure.
I think they've realized that we've detected that they're false. But unfortunately, people would have actually lost quite some investment there, because they tell you invest in this platform.
Yes.
That person is not a financial advisor, nor are they registered with the FSCA. And you listen to them and you invest with them because they look legitimate. It's deep fakes.
Yeah.
So those are some of the things. And again, they are industry knowledge. We just need to know exactly what it is that we're looking out for and what it is that we want to get out of getting the education of knowing about these people. Yeah.
Absolutely.
Yeah.
Let's bring things home a bit. I think, and maybe, we've spoken about the regulators, we've spoken about fraud as a service, we've spoken about, just the tactics that are evolving, we've spoken about how AML in its entirety has evolved. But how do you translate complex AML decisions into something a board can confidently stand behind? Because maybe the confidence is also what we need to touch on.
The board understands numbers more, better than anything. Have a risk discussion. It's as simple as it is. If you're going to talk about more of capabilities, I want to embed that, there's always a so what. And it's at a board level, as it should.
Sure. Yeah. And it would be a miss for me not to ask you this lastly. Where do you think institutions should be investing right now that they're currently underestimating?
Sure. Cross-skilling and multi-skilling. And by that I mean, if I were to enlarge my compliance team, ideally one would have wanted their traditional lawyers. I know now internal audit and risk, but you need your AIs as well. You need people that are data scientists that will be able to help you with the data mining and analysis as well. So I think focusing more on the skills and competencies of, one, your manpower, and two, the technical aspect of it. Do they even know how to use AI? Do they know how to demystify financial crime through using AI? So it's really about the effort to which institutions put in their resources that will make a difference, I think.
Absolutely. Thank you, Lebogang. This was a very insightful conversation. I actually absolutely enjoyed it. And thank you for taking the time to being with us here today. We look forward to the next episode and all the other episodes where conversations will be taking place. Please leave any form of comment. Let us know your thoughts, what it is that you think, what is it that you've experienced. We'd absolutely love to hear from you too. Thank you once again, and thank you to our viewers.
Thank you.